Bitcoin's next level, $50,000 or $200,000? The recent halving event has left many wondering what's next for Bitcoin. Will it continue to rise or experience a correction? In this video, we'll explore the possibilities and examine the technical and fundamental analysis behind Bitcoin's potential next level. Technical analysis. Bitcoin's current price movement is eerily similar to its 2017 trajectory, with a potential target of $50,000. This is based on technical analysis, which identifies patterns and trends in market data. If Bitcoin continues to follow this pattern, it could reach $50,000 in the near future. However, some experts believe that $200,000 is a more realistic target, given the current market conditions. This is because institutional investment, global economic uncertainty, and increasing adoption are all driving demand for Bitcoin. With the halving reducing supply, the stage is set for a potential price explosion. A breakout above $40,000 could be the catalyst for a rapid increase in price, potentially reaching $50,000 or even $200,000. This is because a breakout above $40,000 would indicate a significant shift in market sentiment, with buyers gaining the upper hand over sellers. If this occurs, it could trigger a wave of buying activity, driving the price of Bitcoin higher and potentially reaching new all-time highs. Fundamental analysis. Institutional investment is pouring into Bitcoin, driving demand and fueling growth. This influx of capital from traditional finance players is a significant vote of confidence in the cryptocurrency's potential. Additionally, global economic uncertainty is leading investors to seek safe haven assets like Bitcoin, further increasing demand. At the same time, increasing adoption is also driving demand for Bitcoin. As more individuals, businesses, and institutions begin to use and accept Bitcoin, its utility and value increase. This growing demand, combined with the halving event reducing the supply of new Bitcoins entering the market, creates a perfect storm of conditions that could lead to a price explosion. With these fundamentals in place, the stage is set for a significant price increase. However, the question remains whether this will be enough to reach the lofty targets of $50,000 or $200,000. While the conditions are ripe for a price surge, the cryptocurrency market is notoriously unpredictable, and many factors could influence the outcome. Nevertheless, the current environment suggests a strong potential for Bitcoin's price to rise significantly in the near future. Expert insights. Renowned crypto analysts, experts in the field of cryptocurrency, believe that a price target of $200,000 for Bitcoin is a realistic possibility. This optimism is based on a thorough analysis of current market conditions, including the influx of institutional investment and the impact of global economic uncertainty on investor behavior. Institutional investment, in particular, is seen as a significant driver of demand for Bitcoin. As more traditional finance players enter the cryptocurrency market, they bring with them vast resources and a willingness to invest in this emerging asset class. Meanwhile, global economic uncertainty is leading investors to seek safe haven assets like Bitcoin, further increasing demand and driving up prices. While no one can predict the future with certainty, especially in the notoriously volatile crypto market, the current signs are looking bullish. With demand driven by institutional investment and global economic uncertainty, and supply reduced by the recent halving event, the stage is set for a potential price surge. Renowned crypto analysts believe that $200,000 is a realistic target, and many investors are eagerly watching to see if this prediction will come to pass. Reduced supply. The recent halving event has significantly impacted the Bitcoin market, reducing the supply of new coins entering the market. This event occurs every 4 years and is designed to slow down the rate at which new Bitcoins are created, thereby reducing inflation and maintaining the currency's value. With fewer new coins available, the existing supply is becoming scarcer. This scarcity is driving up prices, as demand for Bitcoin remains strong. As more investors seek to buy Bitcoin, the reduced supply means that prices must rise to meet demand. This fundamental principle of economics is driving the bullish outlook for Bitcoin. The reduced supply and increasing demand make a $200,000 target more likely. As prices continue to rise, investors are becoming increasingly confident in Bitcoin's potential. The halving event has removed a significant amount of supply from the market, making it more likely that prices will continue to rise and potentially reach the $200,000 target predicted by renowned crypto analysts. Increased hoarding. The halving event has led to a significant change in investor behavior, with many opting to hold onto their Bitcoin rather than sell. This phenomenon, known as hoarding, occurs when investors anticipate future price increases and choose to retain their assets rather than cashing out. As a result of this hoarding, the selling pressure on Bitcoin has decreased substantially. With fewer coins available for sale, the downward pressure on prices has been alleviated, allowing the bullish outlook to take hold. This reduction in selling pressure has created a more supportive environment for prices to rise. The hoarding of Bitcoin is a clear indication of investor confidence in the cryptocurrency's future prospects. As more investors hold onto their coins, the available supply dwindles, making it more likely that prices will rise. This self-reinforcing cycle of hoarding and price increases has contributed significantly to the bullish outlook. The decrease in selling pressure has also led to a more stable market, with prices less likely to fluctuate wildly. This stability has attracted more investors, who are drawn to the potential for long-term growth and the reduced risk of sudden price drops. As a result, the halving event has created a more supportive environment for Bitcoin's price to rise, making a $200,000 target more feasible. Reduced inflation. The halving event has had a profound impact on Bitcoin's inflation rate, significantly reducing the number of new coins entering the market. This decrease in new supply has led to a decrease in the inflation rate, making Bitcoin a more attractive store of value. Before the halving, Bitcoin's inflation rate was higher due to the larger number of new coins being mined and added to the circulating supply. However, with the reduction in new supply, the inflation rate has decreased, making Bitcoin more comparable to gold and other traditional stores of value. Gold, in particular, has long been seen as a store of value due to its limited supply and durability. Bitcoin, with its decreasing inflation rate, is now more similar to gold in this regard. This similarity makes Bitcoin a more attractive option for investors seeking a store of value, as it offers the benefits of a digital asset combined with the stability of a traditional store of value. The reduced inflation rate has also made Bitcoin more appealing to long-term investors, who are seeking a safe haven asset to protect their wealth. With its decreasing inflation rate, Bitcoin is now a more viable option for those seeking to preserve their purchasing power over time, making it a more attractive store of value in the digital age. Increased security. The halving event has had a positive impact on the security of the Bitcoin network, as the reward for mining blocks has decreased. This reduction in reward has led to a decrease in the incentive for malicious actors to attack the network, making it a more secure and reliable store of value. Before the halving, the reward for mining blocks was higher, making it a more lucrative target for malicious actors seeking to disrupt the network. However, with the reduction in reward, the incentive for these actors to attack the network has decreased, making it a less attractive target. The decreased reward has also led to a more decentralized and resilient network, as smaller mining operations are now more viable. This decentralization makes it more difficult for malicious actors to launch successful attacks, as they would need to control a larger portion of the network's mining power. Overall, the halving event has increased the security of the Bitcoin network, making it a more reliable store of value. With a decreased incentive for malicious actors to attack the network, and a more decentralized and resilient network, Bitcoin is now a more attractive option for investors seeking a secure and reliable store of value. Will Bitcoin reach $50,000 or $200,000? Only time will tell, but the signs are looking bullish. Remember to always do your own research and consult with financial experts before making any investment decisions. Thanks for watching. If you found this video informative, be sure to subscribe to our channel for more updates on Bitcoin and the cryptocurrency market.